Hello, everyone. I'm Vicki Westapher with Remax Properties and the Make Your Best Move team in Colorado Springs. And today we have Scott Seaman from Bank Central, also in Colorado Springs, but he serves a great deal of states around the country as well with mortgage lending. And he's here today to talk to us about some changes that have come up from Fannie Mae with the conforming loan limits that may be very helpful to a number of people. He's going to give us some insight today. But before we get into that, Scott, I wanted to kind of run through some of the numbers that have been going on this year in our market. As crazy, wild, and fiery hot as it has been, right now, at the end of November, we only had 675 active listings. That is historically the lowest number ever. And that is 60% less than what we had at this time last year. That's a crazy number. Even then, we have also seen a 25% increase in the number of closed sales on homes this year compared to last year. And more importantly, our average sale price has gone up to $429,163, and that's almost 18% more than last year. So we're talking about some very, very big changes in our market from the previous years. One of the things that I'm experiencing with my clients is the fact that they are wanting to take all of that great appreciation that they have accumulated over the past couple of years. And since they've been home, spending a little bit more time in their home, either working at home or homeschooling the kids, they're beginning to realize that maybe their home isn't the exact fit that they wanted it to be. And they're thinking about finding something else. It may not be a bigger home, but it might just be something that has a better floor plan for what they need. So they're taking the appreciation that they've got, and then they are putting that into a new home with an excellent interest rate. So why don't you tell us about how the conforming loan limit change might help some of these buyers?
Great, thanks, Vicki. Yeah, I have 7 kids, so I can tell you the pandemic and staying at home is, yeah, it's a little it's all that. So the Fannie Mae loan limit, it is going up. So the Fannie Mae loan, the conforming loan limit right now is 510,400. So 510,400. Anything above that is considered a jumbo loan and is subject to completely different interest rates and rules. So it's kind of a big deal when this goes up. And this year it's going up to 548,250. So that's a 7.5% increase, which doesn't quite keep up with the 18% increase that you're seeing in purchase price size. But again, the purchase price that you were talking about is the average, and the conforming loan amount is really there to help out with the top end. And so what it does is it helps people who are buying in the 550, 600,000 range not have to put 20% down or 100,000 down. If you're buying 600,000, you could put just the minimum 5% and still be at that great rate that Fannie Mae offers. So it's kind of a big deal that it's raising this far.
That is a big deal. It does help a lot of people to buy the home that they want. And one of the issues that we've had this year as far as the real estate market is with all the competition on almost every single home, most of the buyers are having to do an appraisal gap guarantee to cover the difference between the list price, or what the house will most likely appraise for, and what they've had to offer for a contract price. And so they're having to use a little bit more of their cash to make up that difference. And by being able to go a little bit higher on price point with a smaller down payment, that actually really helps them to compete.
Absolutely. And it keeps interest rates low as well, because anything that's in that conforming Fannie Mae limit is going to have a lower interest rate than you do in the jumbo rate. So it is certainly helping those higher end borrowers on a couple different fronts.
Well, so that brings up the point of interest rates. what are we going to be seeing next year? Are things going to stay pretty much the same as far as the interest rates go, or are we going to get some surprises?
Well, we had a big surprise this year, huh? Nobody could have seen a pandemic coming, but
No,
with everything that's happened this year economically, there's really nothing pushing us into higher interest rates. And I'm not just saying that because I've got a crystal ball, because mine has been broken forever. But I did read a story that Fannie Mae put out. Their economists do tremendous amounts of research. And on October 16th, they put out a story that said that they expect the average interest rate to be 2.8% through 2021. That's just incredibly low. And for
that's
that to be the
amazing.
average rate for the year is just ridiculous. So I think there's some definite damage to our economy worldwide, and there's just not going to be this huge amount of inflation coming that would cause our interest rates to go up. They will at some point, but it doesn't look like it's anytime in the real near future.
So it sounds like a really good time to buy a home
Absolutely, absolutely.
and
Buy or
sell a home and sell a
that's
home.
right.
So with all those pieces coming together, it's the real estate market, both the lending and the purchasing end and selling end of it, is driving a good part of our economy right now in a positive direction, which is one of the few areas that we're seeing that kind of thing. So, with all that being said, what other things has COVID affected in your end of the industry?
Well, the big one, and this has been something that has been going on for about 10 years now, ever since the Dodd-Frank Act back in 2010. But it seems like the way we underwrite self-employed people is just continuing to get tougher and tougher. With so many businesses that have had tough times this year, Fannie Mae was really, really concerned about early defaults on their loans, and so they instituted a lot of final checks that we needed to do just as much as 10 days before closing, where we have to do updated P&Ls, we have to do gather bank statements to justify the profit and loss. We have to collect new contracts or new invoices and just show that a business is still operating as it was based on the 2019 tax return that we collect. So it's been frustrating for self-employed people, and it's going to continue to be frustrating for self-employed people. And we do our best to prepare them, and it is what it is. So if anybody is self-employed, they just got to bear with the process and just
Right.
work with us to get it done.
And just know that, they're not trying to be mean or harsh to you. You're just gonna, if you're self-employed, you are going to have to jump through probably 4 times more hoops than anybody else. And,
Yeah,
I think especially now we really understand that because there are so many industries that have been severely affected. And
yeah.
we don't know exactly what any particular business is going to see as an impact going forward. Hopefully, we'll start to get some reprieve from some of this coming into the next year.
Amen.
Well, thanks so much, Scott, for the insight. I've really enjoyed hearing about how we can help our buyers and our sellers with this new information. And I look forward to talking to you again soon. Take
Thank you.